Market weighted down by the mega caps. 4:20 p.m. Eastern Time, October 30th, 2020, briefing.com. The S&P 500 fell as much as 2.3% on Friday amid weakness in the mega cap stocks. But a strong finish in the value stocks reduced that decline to 1.2% by the close. The tech-sensitive NASDAQ composite dropped 2.5%, while the more value-oriented Dow Jones Industrial Average at negative 0.6% and the Russell 2000 at negative 1.5% fared better. Briefly, Apple trading at $108.86, down $6.46 or 5.6%. Amazon trading at $3,036.15, down $174.86 or 5.5%, and Facebook trading at $263.11, down $17.72 or 6.3%, declined at least 5.5% in the sell news reactions to their better than expected earnings reports. Alphabet, Google, trading at $1,621.01, up 53.77 or 3.4%, was a notable exception to the negative trend. The consumer discretionary, negative 3%, and information technology, negative 2.4% sectors were consistent laggards all day, largely due to the losses in Apple and Amazon. Notably, the financials up 0.3% and energy up 0.2%. Sectors eked out gains as investors bought the dip into the close. For what that's worth, the S&P 500 closed above its September closing low of 3236.92 after briefly dipping below it. Dow Components Honeywell 164.95 up 0.35.2%, and Chevron 69.50 up 0.70 up 1%, also closed slightly higher after beating earnings per share estimates. Twitter, trading at 41.36, down 11.08 or 21.1%, had a disappointing earnings reaction like the mega caps, but its 21% decline was much more severe. In other negative sounding developments, the U.S. set another record in daily coronavirus cases on Thursday, with more than 90,000 new cases, and San Francisco paused some of its reopening efforts due to the alarming resurgence of the coronavirus. While disappointing, the news wasn't necessarily surprising, given similar trends earlier this week. Separately, the Fed announced it lowered the minimum loan size for 3 Main Street facilities to $100,000 from $250,000 to incentivize lending activity. U.S. Treasuries started the session on a higher note amid weakness in equities, but eventually succumbed to selling pressure that pushed longer-dated yields higher. The 2-year yield was flat at 0.15%, and the 10-year yield increased 3 basis points to 0.87%. The U.S. dollar index increased 0.1% to 94.05. WTI crude future prices declined 1.2% or 0.43 to $35.70 per barrel. You're viewing Friday's economic data. Personal income increased 0.9% month to month in September, briefing.com consensus, up 0.03%, and personal spending rose 1.4%, with the consensus, briefing.com consensus of 1%. The PCE price index increased 0.2% month to month, as did the core PCE price index, which excludes food and energy, leaving them up 1.4% year to year and 1.5% year to year, respectively. The personal income and spending data were good, and they were imputed in yesterday's G3 GDP report, gross domestic product report. So there was less of a surprise pop from the favorable headlines. Moreover, we're only a few days away from the start of November, so a report for September isn't altering the anxious mindset for forward-looking market thinking about the election and the alarming rise in daily coronavirus case counts. The final October reading for the University of Michigan's Index of Consumer Sentiment checked in at 81.8, briefing.com consensus 81.2, up from the preliminary reading of 81.2 and the final September reading of 80.4. The key takeaway from the report is that changes in expectations seem to be oriented around election expectations. To that end, the expectations index rose by 50% among Democrats compared to 3 months ago and only 7% among Republicans. The ultimate outcome of the election, it was noted, can accelerate or narrow these partisan shifts. The Q3 unemployment cost index increased 0.5%. Briefing.com consensus was 0.7%, seasonally adjusted for the 3-month period ending in September 2020, after increasing 0.5% for the 3-month period ending June 2020. Wages and salaries, which account for about 70% of compensation costs, rose 0.4%, while benefit costs, which make up the remainder of the compensation costs, increased 0.6%. The key takeaway from the report is that compensation costs for civilian workers, private industry workers, and state and local government workers all moderated from the same period a year ago. The Chicago PMI decreased to 61.1% in October, Briefing.com consensus 59%, from 62.4% in September. Looking ahead, investors will receive the ISM Manufacturing Index for October, construction spending for September, and auto and truck sales for October on Monday. The NASDAQ Composite up 21.6% year-to-date, S&P 500 up merely 1.2% year-to-date, and the Dow Jones Industrial Average down 7.1% year-to-date. The Russell 2000 also down 7.8% year-to-date.